Irish PM. Varadkar saying no Brexit withdrawal deal without the Irish solution. US fixed income, the Treasury when issued 7-year yield at 2.958% before the 29th.
Good afternoon, everybody. Welcome, welcome. Hopefully everyone had a good trading day this morning. Plenty of movement. Lordy, lordy, the markets were bumping all over the place. I had a lot of movement today. It was definitely a pleasant surprise to see that movement come in. Definitely very happy with all of that. But before we jump in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list to be notified every time one of these videos comes out. Along with that, in the email itself, we go over a bunch of stuff that we just don't have time to talk about in the live room, and that's going to be everything from stocks, options, crypto, you name it, it'll show up in there at some point. So make sure to sign up for that if you haven't done so already. Of course, along with that, go in and click on the live Trading subscription and trial info, where you can register for a free 3-day trial in the room. You can hang out with us for a couple days, see what trading with us is all about, and how we approach the markets and analyze things, and see how we do it. Great way to ask some questions, get your feet a little bit wet, and see what it's all about. So make sure to sign up for that if you haven't done so. Now, jumping in, first off, the news, of course. Going into tomorrow, tentatively, we do have some news later tonight for the Japanese session. So if we look later tonight, tentatively, there is some Japanese information with the monetary policy statements and outlook reports. And then going into tomorrow, we also have tentatively the Bank of Japan press conferences. A lot of that probably will happen around, anywhere from 8 tonight to 3 tomorrow morning, Eastern time, that is. So definitely something to keep your eyes out on if you're trading any of the yen pairs. Now, when we're looking at the rest of the news, there's a couple things that stand out. First of all, 355, the German unemployment change forecasted at negative 15,000. At 4:30 out of the UK, we have the GDP for quarter 1 and the GDP year over year for quarter 1. Both of those are coming out at 4:30, respectively. 0.3% and 1.4% are the estimates. Then at 8:30 for the U.S. session, we have the GDP for quarter one. That is the quarter one. How many times can I fit quarter in a sentence? The forecast for that is 2%. And then at 10 o'clock out of the UK, Bank of England Governor Carney is speaking. So a relatively light news calendar for tomorrow. That's not necessarily that big of a deal. That might just mean that we might have a little bit more of an organic price action, kind of like what we had today. I mean, in all reality, we didn't have that much news today, and it felt like today had some really good movement. So certainly won't be upset by that by any means, but just kind of just kind of keep an eye on things, and with a light news calendar for tomorrow, might have plenty to work with. So. Let's drop this out of the way, take a look at the markets. First off, the euro. The euro did find a whole bunch of support and resistance off of that 22,215. Finally ended up breaking down underneath it after a really wild ride. I mean, it had a snap down to test the channel low, then held as resistance, and broke up and tested the moving average. Held as support for a little while, and then resistance again, and now we're finally breaking through. Major support is being tested at 21,710. That said, a lot of the big levels of support that I was looking for are already broken. Plenty of opportunities to use those as both support and resistance, and we'll get into one of those on the S&P that we had today in the live trade room. But this is the area where the markets generally want to kind of figure out what they want to do. And the fact that we have such a wide bear channel from earlier, right, from point A to B and copy-pasting that down to C, that offers up a lot of downside potential if the market does want to end up falling. There's a lot of open space right now, and there's not a whole lot underneath us to kind of catch the market if it does want to break through this 21,710. So if this level does start breaking down pretty aggressively, we might see some bare legs to the downside all the way back down to 1.20. I mean, we've been talking about continuation to the bear side, but I really wasn't expecting that big of amount of continuation. Either way, sellers obviously mean business here, and every time the buyers try to come in, they get slapped right back down again, so we have to be on the sell side looking for continuation lower. Arguably, one thing that we could potentially look for would be an AB equals CD move. We have already reached that, right? That was down here at the level of support. So this level right here at 21,710 not only has major support from earlier, that level was found way back here on January 9th, but we also have an AB equals CD corrective phase down that ends just below that. So there's a lot of support here. That's why I said if it can start breaking through this, then it could be all running shoes strapped on and time to go down, because this thing has been, well, it's been on the floor for a while, and every time it tries to pick itself back up, it gets slapped right back down. Heavy amount of bears coming in on the euro, and it doesn't look like that's about to stop. If this current candle, because it is so big, does end up closing bearish, especially if it can close down here rather than all the way up here, that could be a potential sign of short-term exhaustion, meaning that the sellers have pretty much blown everything they had on that down move, and they're going to start looking to take some profit, and that could equal kind of a short-term bounce like we had back here. Sometimes those exhaustive blow-offs end up pulling all the way back to where that whole move started, so we could see price rallying all the way back up to 22,215 before seeing the sellers continue. It all kind of depends on how this candle closes here, especially if it closes really, really low in the candle. That would be a good sign for buyers to potentially get maybe a little bit of a bounce or something going. Now, in terms of some of the other markets, the euro is taken care of. Looking at gold, gold is finally breaking through that major support, not after holding for, I mean, a good day or so off of that level. Lots and lots of support coming off of 22 to 23, that whole area, and we are now finally breaking through, and just like the euro, breaking down straight into support at 17.4. This level of support isn't as old, that's back on March 20, but we do have a couple other things that are compensating for it as well, like the rising support. A to B equals our C test over here. And, well, so far that C test lines up almost perfectly with horizontal support. I really wish we would have gotten a little bit further down to tap the low of the channel, that we would have three things stacked up on top of one another. But for the most part, there is a lot of buying pressure, both sellers taking profit in major support zones, and also buyers just kind of pinging it off of those major support zones, looking for some trades there as well. Level of support earlier that we had marked up at 23.3, that is now gone since we've broken down. New level of resistance coming in off of that bear move at 25.6. And we do also still have 22.6 that we can now utilize as resistance instead. So now that we've broken through it pretty decisively, might be able to find some counter bouncing if it comes back. That down there. Over on crude, Little bit of a mixed bag here on crude. You know, again, we still have this monstrous area of resistance up here that I would love to see the market push into and trap. But for right now, it seems like we got stuck on the inside of the channel. And that was a concern we were talking about yesterday. A lot of times you get these dips, they start running higher, and they hit the other areas before they can make it up through these other levels, these big levels of resistance. Now we have somewhat of a wedge. So wedge bottom and wedge top. And we are also kind of stuck on the inside of that longer term channel, and it's holding really, really nicely. It doesn't necessarily look like the sellers are taking over. I mean, all they've had is, what, basically 3 dojis back to back. An attempted bear breakout, but that landed back on support at 67.74 and bounced right back up again. So there's not really much in the way of, you know, if I were a seller and I see something like this, I'm not thinking, man, I gotta sell the house and really pound this thing down because this thing's going to go through the floor. It just doesn't look that way right now. Now, we are coming off of the inside of the bull channel, and a lot of times when you break those channels like this, we hold the inside, we break above it, fails, comes back in and holds the inside. A lot of times that is the starting point of a very large correction, but normally you get some better looking candles. Right now, this just looks kind of crappy. So I'm still not losing sight of the trap on the highs. It is getting a little bit harder the more and more time that this takes to actually ramp up there, but you know, for the most part, at the very least, we're dealing with a little bit of a range. Buy low, sell high, preferably more on the sell high side of things where we are to try to drive the market back to the downside. Otherwise, though, no new levels of support or resistance other than that 67.74 we marked up earlier in the live trade room. That's about it. There's not much else going on, and actually that has been tested, so we'll mark that as a dash dot so I know. But there's not really anything else going on. Pretty straightforward there on crude. Get that out of the way. And then the S&P. The S&P did have that just huge reversal off the lows. Looks like they were going to try to break it out and then completely failed. And that's the same situation that we saw on, what other market was that? That was crude oil. We tried getting that strong break to the downside and immediately failed and went flying back up again. The S&P must be taking notes from that because that's almost a copy-paste of exactly what happened on crude. They tried getting a strong breakdown, went flying higher. Now we have a new level of support at 26.13.5, and we are off to the races to the upside. The buyers breaking through resistance at 56.75, not after getting some beautiful bouncing on that. And now we're breaking back through it, potential to utilize that as support. We do have falling resistance in the way, and if we utilize this as a channel, we can see that it looks like the bottom of the channel in that type of scenario might have gotten a little bit exhausted, right? So this exhaustion blow off on the lows could equal a counter correction all the way back up to that original area we were looking to sell in at around 27.20. This is a very strong bull rally to the upside, and the one thing that we do need to keep our eyes on is where this giant bear drop came from. A lot of times the markets love to retest those areas and reject them. It's the sellers basically coming back to their original area of entry, and they're able to jump back in and defend it and push it back down again. So that area is a big area of interest on the S&P, and that's going to be floating around. Let me make sure I get it in the right place. Around 76.5. Arguably up to 82.75, but 76.5 definitely a nice area of interest. Outside of that, everything else looks pretty good. New level of support potentially coming in on the secondary leg to the upside at 43.75. And that level of resistance at 56.75, that was a beauty today when we're talking about the S&P. And if we look at the faster time frames, we can see that on the S&P. We actually played that one earlier today. But it came up into that level, bounced off of it, and gave a beautiful 5-point drop to the downside before bouncing back up, using it as support. Trying to use it as support, got a little bit messy inside here, and now it's off to the races. So just some beautiful price action around this area. The buyers obviously mean some business here. It's just a matter of seeing how far they can get it to go. I'm looking for 76.5 at the very least as a potential area to, you know, kind of fight back a little bit, if you will. And then we've got the bonds, of course. The bonds have sunk all the way down to major support at 144, what was that, 144.16 or 15, something like that. 26, I wasn't even close. 141.26 with a decent amount of support on that bounce, rallying the market back up. That level of support technically did break. It didn't hold very well. I mean, it did hold on the initial couple tests there. You can see those wicks down at the bottom bouncing very nicely, but then it closed through, stayed underneath it, stayed underneath it, stayed underneath it. It's just not that great of a level of support anymore. Next one is going to be below that at 141.375. arguably, you know, this level of support that we were looking for at 142.12.5 was just this offset breakdown of the lows, and we are now back into that profitable territory where we can kind of measure up how much risk actually took place here. So we have the original risk. Now we're looking for the buyers to push the market higher and grab that 1-to-1 and maybe even potentially a 2-to-1 move to the upside, and that would be a very interesting spot for a couple reasons. First of all, sellers will definitely be eyeballing that. Buyers taking profit, and new sellers trying to push the market down. That lines up perfectly with that previous swing high, and that's a 2-to-1 for the buyers who bought down here. That creates a big zone, right? That's a big area of interest that we want to keep our eyes on. So this level here, I'm going to move this up just a little bit to that previous swing high. That trade has already taken place and is rallying higher. Everything else looks really good, but that trap high at 143.08 or so, ooh, man, that looks like a beauty of a location if the market can rally up there, and we'll see what they can do. Not much else going on there for the bonds, though. Pretty back and forth and pretty choppy. Let's see. You're back at it again with LE. Still waiting for a little bit more of a drop than going long. Awesome. Good to hear. While we're talking about it, let's take a look. We've got a couple of them. I've been tracking GNPX. GNPX is going absolutely bonkers right now, especially in a faster time frame. This thing has just been going crazy. Beautiful movement overall, and just looking for some potential traps or something to get this thing to keep ripping higher. But man, alive, GNPX is just going nuts. But let's take a look at the LE for you. Live cattle is pulling back a little bit. They had that attempted rally above that bull bar, and it didn't really get very much going. And again, the one big thing that I like looking at is the previous swings before an attempted failed breakout. Right, so you have that rally up, a pullback, an attempted breakout that fails. The markets usually come back to that inside swing, and it does kind of look like someone giving you a middle finger. That's kind of how I look at that. Right, they come up to it, and it kind of gives you that little ugh, and it starts pushing back down again. And that high was right over here, if we mark up that previous swing. And we can see, you know, for the most part, they did respect that area quite well for, I guess, what we'll call a middle finger trade, right? It popped up, tapped into it, and then failed right back down again. So all of the sellers who did get in here were trapped out here, and the market did rally up into resistance. But once they hit that resistance, man alive, that thing just went tumbling down. With this failure on the highs, I would start getting a little bit concerned that this might go a little further. Instead of looking for, you know, maybe filling in this gap or something like that. I'm sure there'll be some bounces there. But this would start making me think, hey, we might be able to trap this low down here and actually get some legs to the downside with all this failure at the top. I still would love to see it go up and fill in this 1-to-1 gap at the highs. But now with that next failure on that secondary kind of middle finger test at 106.175, this could be gearing up for a slightly larger drop. Again, short-term bounces, you'll probably be able to find some scalping opportunities off of that 103.95. But really for me, I'm looking for 101.625 or even a trap below the lows at 101.20. All of those areas have now become very interesting with this failure off of the highs. That's no bueno. That's not what buyers want to see on this breakout. I wanted to see the sellers get trapped, stuck, and then slammed higher. They got stuck and trapped, but it didn't really slam higher. It popped into resistance and just failed all the way back down again. So, a little bit concerning there on live cattle. I would prefer to see maybe a little bit of a deeper dip now. We'll have to wait and see. Corn and some of the other ones, you know, a lot of the ags are catching a big gap to the upside. Corn had a nice gap to the upside. Wheat is gapping to the upside. Wheat actually started pulling back a little bit. And soybeans also catching a gap to the upside. The strongest one out of all of them, though, is what we just talked about, corn. That was a big rip to the upside. Now we're nearing into 400, that big round number, up at 400, breaking out of the wedge on a gap. We could see a little bit more continuation before this starts running into some problems, especially with a big round number only about $5 away. Some of our other favorites, Twitter. Twitter did end up, we were talking about this yesterday on how, you know, on a crazy off chance that they don't end up closing underneath these lows, that's a really strong sign of bulls. And they didn't close underneath the lows. I think they might, where was exactly was a close here? The close is at, oh, my mouse moved. The close was at 29.75, so they did close above 29.71, and they closed above 29.43. Man, what a rejection off the bottom. Buyers buying into the moving average, bouncing it back up. They got that gap fill and just slammed it up, and that is a very good sign that we could potentially start reaching out towards that 35, especially considering the fact that with all of this bearishness, we get a bear engulfing candle and it still fails. Good shot of this catching some rallying. So I will be definitely keeping an eye on Twitter as more time goes by. That's looking good. One of our other favorites, Boeing, catching a nice bull continuation bounce off of that. Looks like that was just a quick snapback on earnings, and buyers bought into it. Probably used it as an excuse to buy some cheap, rallying higher. Didn't quite make it back down to 17.39 or 11.17. Those are the areas that I was really kind of hoping to see price dip down to potentially buy back into, but in this case, we're still looking for the original rally back up towards 371.6. Of course, a logical area of interest is going to be around this cluster at around 355, ahead of that zone. MasterCard also just rocket shipping to the upside. You know, yesterday we were saying how well, actually for the last, week and a half, 2 weeks, we were looking at an original bull bounce area somewhere around here with continuation up, and this bull bar was really what sparked it all, looking for continuation higher. And when it started pulling back a little bit to the wider channel bottom yesterday, it tapped it, immediately rejected it, and now today we gap up and go flying higher. Major target objectives, if traders are still in MasterCard, are probably looking for a retest of right around where we are right now, around 180. Big round number, of course. A lot of traders front run that by up to 50 cents or so. But if this does start breaking out above that, 183.73 is the high, and potentially even further. MasterCard just looking really good. Dropbox still hasn't crossed underneath that low, which is really what I'm looking for, so not a whole lot going on there. We were talking about IPI yesterday in the newsletter, at least, and it does have some really good follow through to the upside. It had a quick little pullback and continuation. It's looking pretty good. You can see 461 was the area that I was looking at personally. So far, I mean, it's holding up nicely. So. Feel free to type in any markets that you want me to take a look at for you. Overall, I mean, man, we had a decent amount of movement today. I'm certainly not going to be upset by the movement today. These are the kind of days that I love, where we can actually get something going, rather than just sitting here on hands hoping that something happens, you know. Hopefully everyone else had a good trading day as well. Yeah, GNPX has been a rocket ship. Man, GNPX, what a rally higher. Just an absolute rip to the upside. I first started talking about it in the chat room when did I start talking about that in the chat room? At 12. So I started talking about it in the chat room at 12, and man, from the time where we started talking about it at 12 o'clock, it's up over 100% from there. I mean, it's just absurd the amount of bullishness coming in GNPX. And for the phonetic out there, that's Golf November Papa X-ray, GNPX. You know, with my North Michigan accent, I have I kind of muddle words and letters together sometimes. All right. Well, I'm not seeing any market requests or anything that we haven't already covered. So that's going to do it for today. You know, today, these are the kinds of days that I love seeing, when we're actually getting some volume, getting some movement, getting things going. You know, the game plan going into tomorrow is kind of a waiting game. You know, with the bonds looking for continuation to the upside to at least get to a 1-to-1 actual risk, if not a little bit further, and then we start pushing into major levels of interest. On crude oil, kind of a waiting game right now. We need a lot more information on crude oil, really, before we can get some good decision-making going. On gold, we're breaking down, testing major support, likely to find some good bouncing down here. And the S&P, looking for 76.5 now. I mean, this thing's all over the place, but... aside from that, that'll do it for today. So as always, underneath the video, click on the subscribe button so that you subscribe to the channel. You don't miss us going live. We go live Monday through Thursday at 1 p.m. Eastern. Yeah, we go through all the market analysis and and get all kinds of stuff together. And well, so far it's been really working. It's been working really well. So definitely not too upset by that. Also, to the left or to the right, one of those ways, click on the little bell icon next to subscribe so you get notified every time we go live so you don't miss it. As always, that's going to do it. If you have any questions or anything like that that I missed, feel free to send it to me in an email, jbrink@slingshotfutures.com. And like we always say, whenever you're trading a market, doesn't matter what market you're trading, always make a plan, trade the plan, follow those rules, and you'll be just fine. Until next time, have a good weekend, because we're not going to do one tomorrow going into Friday. So have a good weekend. Hopefully you have a good trading day tomorrow. Fingers crossed we get some more movement, and we'll see you all back on Monday. So have a good one, and we'll talk to you all later.